How does a company lose $12.6 billion in a single quarter and call it a success? Welcome to 2026, where the company formerly known as MicroStrategy has officially rebranded into Strategy Inc., a Bitcoin treasury firm that no longer cares about traditional profits. They've launched a staggering $84 billion plan to corner the Bitcoin market. But with their stock trading at a massive discount, the infinite money loop is starting to break. Is this a digital fortress or a monument to financial overreach? Let's find out. Hi, I'm Zenvik, and welcome to today's video. Imagine a company that stops caring about its actual business and decides to bet its entire future on a single digital asset. As of early 2026, MicroStrategy is gone, replaced by Strategy Inc. They aren't just a software firm anymore, they are the world's first Bitcoin treasury company. They've moved from selling business intelligence to building a digital fortress backed by over 713,000 Bitcoins. But as the market turns volatile, the man behind the curtain, Michael Saylor, is beginning to snap. How does this even work? It's called a reflexive loop. When Bitcoin goes up, Strategy Inc.'s stock price rockets. They then use that expensive stock to raise billions of dollars to buy even more Bitcoin. In 2025, they went nuclear with the 42-42 plan. The goal, raise $84 billion over 3 years, split equally between equity sales and debt to corner the Bitcoin market. To do this, they've built a specialized arsenal of financial instruments. Strike, with the ticker symbol STRK, an 8% fixed dividend share that lets investors participate in the Bitcoin upside. Then we have Stretch, STRC, a variable rate tool designed to stay stable at $100, shielding investors from the most violent price swings in the common stock or Bitcoin. And lastly, Strife and Stride, higher risk preferred shares for those looking for maximum yield. But the glitch is starting to flicker. By early 2026, the NAV premium has largely evaporated, and the stock has periodically traded at a discount, NAV, meaning net asset value. Critics call it a perpetual dilution machine that requires Bitcoin prices to skyrocket just to keep the stock price from sinking under the weight of its own debt. As the market gets volatile, Michael Saylor's rhetoric has shifted from visionary to defensive. In a series of recent 2026 interviews, he didn't just defend his model. He attacked the intelligence of anyone questioning it. When the interviewer Danny from What Bitcoin Did suggested that investors were complaining about Bitcoin's price action, Saylor snapped, comparing Bitcoin's 100-day movements to the fundamental laws of nature and human achievement.
Like, even fundamentally, those are very bullish things. I totally agree. But the price is lower today than it was this time last year. I don't know if this is almost a self-fulfilling prophecy over sort of people thinking a 4-year cycle is a real thing and therefore there's selling of Bitcoin. I think the 4-year cycle is dead. What do you think is going to happen in 2026?
I think that trying to guess where the market goes over a 100-day time frame is a fool's errand.
Mm-hmm.
Like, I literally just said 95 days ago, we were at an all-time high, and you're complaining about Bitcoin price action. Like, we have the attention, of 6th graders. Not even 6th graders.
It's not complaining. It's
Name
more
one
I'm surprised.
thing in your life you accomplished in less than 100 days. Like, you can't.
Mm-hmm.
You're supposed to you can't have a baby in less than 100 days. You can't get a college degree in less than 100 days. How many companies were started and declared successful in less than 100 days?
The tension reached a boiling point when the interviewer Danny asked if the market could sustain so many pure-play treasury companies. Saylor called the premise an ignorant, offensive statement and a toxic line of questioning. To Saylor, criticizing a company for buying Bitcoin with debt while ignoring millions of money-losing companies that own no Bitcoin is a betrayal of logic.
But I guess the question more is, though, do you think the market can sustain this many treasury companies? Because we see, especially the smaller ones, almost all of them are now trading at like a significant discount to their
I
NAV.
think you're just missing the point. You're like the Bitcoin community tends to eat its young. Like, they would rather criticize a company that buys Bitcoin than criticize a company that doesn't buy Bitcoin.
Mm-hmm.
Why don't you focus upon criticizing the money-losing companies that don't own Bitcoin? Why would you buy them? Why aren't you criticizing them?
No, I agree with that. But it's not that I'm criticizing them. It's just that the shareholders in some of these other treasury companies are getting absolutely crushed. And like, is there any way that some of these companies ever get back to like a 1x MNAV?
Yeah, I just don't accept the criticism. You made an investment in a company. Why did you invest in the company, right? My problem with the premise is you somehow think that it's okay for 400 million companies to not buy Bitcoin and you like them. And you're going to criticize the companies, the 200 companies that bought Bitcoin. And that's the thing, that's your brilliance.
The thing that I would
How is it brilliant for you to ignore the fact that 400 million companies didn't buy Bitcoin and somehow that's okay? And you're going to criticize the 200 companies that bought Bitcoin?
No, that's not the criticism I'm making.
Saylor, clearly frustrated, takes great offense to Danny's questions. He keeps mentioning that 400 million companies exist in the world. He uses this a lot in the interview as an argument. Just take a listen.
It's the idea of just issuing debt to buy Bitcoin rather than being like a cash flow positive business.
That's just an ignorant, offensive statement on your part.
Please tell me why.
Who are you to say they're just issuing debt to buy Bitcoin, right? You said that.
Mm-hmm.
Like, there's 400 million companies in the world.
Is Strategy Inc. a digital fortress or a house of cards? The accounting reality looks grim on paper. Under new FASB rules, the company reported a staggering $12.6 billion net loss in Q4 2025 because of a 25% drop in Bitcoin's price. But management remains unfazed. They claim to have built a fortress backed by 713,502 Bitcoin and a $2.25 billion cash reserve. They argue this cash is enough to pay all dividends and debts for 2.5 years without selling a single Bitcoin. In their most daring move, they presented the $8,000 scenario. They calculated that even if Bitcoin crashed 88% from $69,000 down to $8,000, their reserves would still be worth $6 billion, exactly matching their net debt. In their eyes, they are mathematically unbankruptable. Critics aren't convinced. They point out that this fortress ignores market psychology. If the stock trades at a discount and the capital markets close, those high coupon rates on preferred shares will rapidly bleed the company's cash reserves dry. As we move through 2026, Strategy Inc. stands at a crossroads. It has survived an exclusion threat from the MSCI index, which would have forced billions in selling, but the regulatory overhang remains. An MSCI index is a global shopping list of stocks used by the world's largest investment funds to decide what to buy. Trillions of dollars in passive investments, like ETFs, are legally required to mirror these indexes. If a company is on the list, these funds must buy its shares. If it is removed, they are forced to sell them immediately regardless of the company's actual performance. For a company like Strategy, an exclusion threat is a multi-million or even billion-dollar problem because it triggers a massive mechanical sell-off. When MSCI removes a stock, index tracking funds dump their holdings all at once to stay synchronized with the new list. This sudden massive drop in demand usually crashes the stock price, reduces the company's ability to raise cheap capital, and marks them as ineligible for mainstream institutional portfolios. On one hand, the political landscape is turning. With the Genius Act and a more crypto-friendly SEC, Saylor's vision of a national Bitcoin reserve is no longer just a fever dream, it's a political talking point. But the future of the stock depends on one thing: the price of Bitcoin. The bull case: if Bitcoin crosses $150,000, the NAV premium returns, the 4242 plan accelerates, and debt is converted into equity by the Strike preferred shares now will be convertible. The bear case: if Bitcoin stays below $50,000, the perpetual dilution machine breaks, investor trust evaporates, and the company may be forced to do the unthinkable: stop buying Bitcoins. Strategy Inc. is no longer a software company with a Bitcoin side hustle. It is a leveraged financial instrument. If Michael Saylor is right, he's a pioneer of a new monetary system. If he's wrong, Strategy Inc. will be remembered as the ultimate monument to modern financial overreach. Thank you so much for watching. Please like and subscribe. It will be really appreciated. I hope you enjoyed this video, and I'm going to see you in the next one.